Hello traders everywhere, Adam Hewison here, coming to you from the digital studios of MarketClub. And it's Wednesday, the 22nd of May, and this is your midday update. Target and Lowe's both miss big. Who's next? Well, we don't know yet, but we're going to look at Ben Bernanke's speech, what he said today on the Hill, and also the wild gyrations in gold, and also the canary in the mine. So let's go and take a look at these stocks right now. We'll go to our portfolio manager, and here we are, starting with the Dow. Dow, all the triangles are positive as they are on the NASDAQ and the S&P. The trend is very clearly up in those markets. Looking at our, let's just take a look at the Dow right now. You can see we've hit new highs here for the move. I am not excited about buying this move. And right here at this point in time, the trend is your friend. We've been long this market from 13,661 at almost 2,000 points ago. And I see little reason to jump into this market right now. Watch for a potential reversal to come into this market somewhere along the line here. Either pullback or setback or something, but it may be something completely out of the blue that occurs. So let's go to our next market. Pretty much the same with the NASDAQ and pretty much the same with the S&P 500 new highs. But you can see this is just we've just gone from 1540 to 1673. 79 rather, without any kind of a pullback. So I think we're going to see more of a two-way market, much like here, and that would be a healthier sign for the market. This straight-up business is not healthy for the market, in my opinion. And Ben Bernanke's statement on the Hill today, they're disappointed with this. You have to say they spent $4 trillion, and they've got a stock market that's gone up, but unemployment hasn't changed. And what they're failing to understand and look at is the fact that the employment market in the U.S., and in fact probably the world, has changed. We are not looking for factory workers. It's skilled, scientific, technical workers, and that's the key thing. And that does not create gazillions of jobs. It creates millions, thousands maybe, but it doesn't create bazillions of jobs. So let's go right into our next market. Gold has had a wild ride today. We were up $20 at one time, trading as high as $13.95, been as low as $13.75. The market's trading at $13.78 real time, and it's not over till it's over. Should we go and close under the $13.40 area, which is right around here, this is not going to be a good sign for this market, but I think it's still too early to say. We have a mixed picture on our trade triangles. We have two red trade triangles and one green, indicating you should be on the sidelines. If you're an intermediate or short-term trader, be on the sidelines here. It's a much too expensive game to trade. So moving to crude oil, we are, just as a heads up, we're going to the July crude oil. Please make a note of that. This is no longer the June, it's July we're trading. And you can see we've had a pullback here. If we put our Fibonacci indicator in right here, you can see that the Fibonacci retracement hit right at 61.8%, and it's bounced from there. Be interesting to see where we close for the day, but the reality is the trend is somewhat mixed. You've got the weekly positive and the daily negative, meaning you should be on the sidelines, and there's the overall longer term trend. If this is in fact going to be a top with these three tops here, be careful there. But I think for the moment we're going to go sideways to higher, and we are about unchanged for the year. Now the question is, this is expensive gas. Make no mistake about it. This is expensive than it was just a few years ago. And the question is, how is this going to affect the economy? No one's talking about this right now, but that is going to have and play some part on the economy. So let's go to our next market. The next market we're looking at is the Eurodollar. Eurodollar rally up to the 129.5 level, pop back down to 28.79. The euro is not going to go anywhere. I mean, let's not get too excited about the euro going stronger against the dollar. It's just a different economy. We still have this, we talked about this before. Let me put a close-only chart on here. We still talked about this pivot point action we saw, which has really kind of played out for now, in that as we had a top here, went down, another top here, the market went below this level, so we can count from this level. 1, 2, 3.5, 1, 2, 3.5. So this is kind of like where it should have hit. It did. Now it has to do a little more action before it can go higher or lower. In this little pullback we've seen and turn around, I think we're just going to see the market go up and eventually just erode down. I don't see anything happening in Europe that's going to be positive for the euro. So let's just clear the screen off and go to our next market we're looking at. That's the SPY of the gold shares. Pretty much mirrors exactly what gold is doing. It's a great way to trade if you want to trade gold. It's an ETF. It's the most liquid of all the gold ETFs. This is Target, which announced their earnings today. They missed. We still have a positive longer-term trend, but you should be out of this market. Today it's 68.75. It's 68.70 right now. But watch a couple of things you want to watch for on this. Let's just put this candlestick charts on. I like the candlestick charts. We do have a free booklet. If you want to get that free booklet on candlestick charts, you're more than welcome to it. So let's take a look at what's going on right here with the MACD. You can see it's getting very, very close to crossing over. That's something we want to watch very carefully. And that is if we cross over, the blue line crosses below the red line, that would be a strong indication that this market's going down. Today, if we close down here, this is not going to be a good sign, particularly for this market. Again, you have a little bit of a, let's just go back to a line chart just to give you an idea. You have a little bit of a base here where the market's been going sideways since pretty much a month ago. In fact, if this is today's the 22nd, I would say exactly a month it's been going sideways. Made new highs, no one got excited, came back down, and now it's looking a little bit heavy. So I'd be very cautious about this. This dovetails very, very well in the video that we did on Walmart, and that was the canary in the mine, and things don't look good at Walmart. They don't look good at Target. And these are big stores that sell products to middle America. So I think that's a tip-off in terms of what potentially could be happening. Hasn't made the mainstream yet. So pay attention to that. Lowe's came in. Now Lowe's has been a success story in terms of trading. We've got some nice, here's our last buy point in Lowe's, and that was at, let's just do that. That was back in September 5th. Of last year, and of course we had a nice run up from those levels, 28.71. You see it here and you see it here, and before that we had a nice run up, 22.48 up to these levels here around 32. So before it turned down. How we trade this obviously is with our monthlies and weeklies. When you put those in, it gives you a better indication. Our last buy point on the weekly was May 3rd, 39.42. The market's still at 42. The earnings came out. They were somewhat disappointing. The one concern I do have right now, though, is the momentum on the MACD. And the MACD momentum, this is not, we made new highs here. You can see that right here. And the MACD did not make new highs. So this is a little bit of a concern and a question mark. So I'd be very careful with this market. Let's go to our portfolio. And we've got one more market to look at, Hewlett-Packard. And that announces their earnings this afternoon. What I'd look to see in Hewlett-Packard, let me just take this off and scope this in a little bit closer, 6 month, let's say. And this is what we see with Hewlett-Packard. We see the crossover in the line. That is not a good sign. Also, if we put our Fibonacci in here, you can see that's the lows. You can see we had a 50%. Let's just put the candlestick charts in and pull this down to there and this up to here. So you can see we got to the 50% range. Not an unusual thing to do. The market's saying basically right now it could go either way in terms of the earnings coming out this afternoon. But this is, it looks to me like this market has gone really nowhere since March. So you've got March, April, almost May, half of May, over half of May. For 2.5 months, the market's really gone nowhere but sort of sideways to lower. So I think this is going to be a very, very big test. If we see the market come in disappointing today, I think it's going to be a lot of selling coming into this market. So let's see what happens after the close today, after the bell. HP will announce their earnings. So, hey, I'm Adam Hewison. Thanks for stopping by. Every success in the market. Thanks for watching this video. I hope you found it helpful.